How's it going, everybody? This is Camera Teams Options. And today, we're going to review what actually happened last week and take a look at next week and the way I interpret that. You can join me for a video, or you can, because, anyway, we can start here with the earnings releases coming up for the next week. And we'll reflect on the schedule, which means we should be going back to the beginning of the schedule soon enough. But, you know, hey, sometimes these guys all have to report their earnings, so they just do it. That's funny. Anyways, there you go. Okay, taking a look at how we did last week from a sector report. This does not look very happy. Utilities, energy, interesting though, to report everything else is down for the week. Now, take a look at the charts because if you were to simply look at this, you think the market was crashing. Or at least, they're coming down. Feels like preeminent, right? Not surprising that things like energy and utilities are operating in conjunction at this point in time, and that I'm surprised staples as well as there's only spent discretionary communication services. I would have actually thought technology would be a little bit down a little bit farther and materials would be up a little higher. We'll see. Basically everything kind of in the tank. For the past 5 days, anyway. Daily economic release calendar, now admittedly this is coming up. We did just have a rate cut, 25 basis points. And my guess, regardless of all the chit-chat going on out there, I think most people are on board with the same thing, is that that is the only one that we'll see this year. So I don't think that we're going to see anything more than just the 25 basis points, and then we'll go to next year, so we'll see what happens. So we have nothing for Monday, Tuesday, and again, these are the market movers. We've got some consumer confidence report at 9 o'clock Central Time, 10 o'clock Eastern, and then grain stocks Wednesday. Consumer confidence is going to be telling. So again, 9 o'clock Central Time, 10 o'clock to 10:30, we've got manufacturing index and petroleum report. Thursday at 8:30 Central Time, so pre-market, we've got the jobless claims, pretty normal stuff there coming up, but we'll see how those look. Those have been a big factor lately. And then Friday, employment situation at 7:30 Central, 8:30 Eastern. That kind of goes in line with the unemployment reports from the day. So we will see how these play out, how big of an effect they have. Now, a lot of the news around the rate cuts has been on the employment situation, and good, bad, or different. The dumb part is you can see half the people saying, oh, well, your employment's looking much better, and then you see another half the people saying, oh, it's looking terrible. So from my perspective, it all depends on your perspective. When I see a lot of pundits operating in different directions, that tells me nobody knows what's going on. That's what it tells me. So trust the numbers, look at the numbers, see what's happening, and understand from that perspective alone, draw your own conclusions. All right, let's go ahead and go to the charts. All right, so starting with RTY, here's last week. We got Friday, Thursday, Wednesday, Tuesday, Monday. So Monday kind of operated sideways with RTY. We popped up, set a all-time high in RTY. Is it all-time high? It's all-time high? Oh, we set a high on this chart. But I think it was the all-time high. Anyway, we set a high. Also tagged the third standard deviation on the other channels, and quickly over the next 2 days, including the day that it hit, pulled a straight up reversion of the mean. We went 30 ADR right back to the 21, and then the next day popped up, and some people, you may call it a gap fill, you may not call that a gap fill. I would want to see it to the candle body for a total gap fill, but the point is, we did recover quite nicely on Friday by the end of the day. Let's go take a look at YM. Okay, so here's our numbers, right? I can remove this one. I didn't move any lines in there, so I'm not too worried about it, but we'll get rid of this. Not worried about that either. Okay, that is the only inefficiency I really see. The rest of this looks pretty decent. You get a little bit of slop here, but it kind of fills itself in. Admittedly, these are wicks, so this is kind of a blank area in here where price is still kind of jumps over. But you had kind of the same deal, right? So Monday was in line with the prior week's rise, and just kind of held sideways. It actually opened lower and ended higher than the day prior. That's interesting. So engulfing candle. And then again, you had this Tuesday pop up, hit ourselves a little high, and then immediately a reversion to the mean. Now we didn't get not as clean as RTY. We didn't revert all the way back to the mean. They didn't get really picky, but here's what it is. It was a reversion to the mean. And then we popped up and right back into this same range that we started consolidation on Monday. A little bit lower in the end, but given what we were coming back up from, I don't think that was bad at all. I think Friday was a really good one. Very tradable too. Let's go to ES. ES. Okay, a little bit different here. Let's do these lines. These are a bit busy. We're putting them right now. They're useless. Then we'll move this up to the next swing low, which is going to be, again, reversion to the mean. So all these pictures are the same. Consolidation on Monday. Pop up now. Monday actually set the high. Tuesday tried to meet it, but did not. And then went from the third ATR down to, again, the mean. Pop back up on Friday and filled the gap rather handily on Friday from Wednesday. So, I mean, obviously the question is, do we continue back up? Was this just a reversion to the mean with more bullish movement ahead of it? This gives us some nice reset, some structure above, some places to actually work with on an intraday chart for some trades. Not a bad look. Not a bad look. If you are bullish, which I tend to be at this moment. If we were to be bearish. So, first off, we're looking at this gap. We still haven't built this gap. I don't like it. I want to see it come back down to here. So, we haven't seen that. We did get some action down into it, though. Let's try for reversion. We haven't do swing low, which really you can take either of those for the lower, and I'll show you. No, I'm gonna leave it there. And the reason why I leave it there is because had buyers step in here, and then we have a higher low, so all these buyers, so your liquidity is going to be below this one, because these guys are already supported If this fails, then this fails, then we start to see down here. So if we're talking to the downside, we really need to see it not recover into this consolidation, right? We're a little bit below it right now, just peeking into it. If we get into this consolidation and it starts moving sideways, I think that's a bull case. If we get in, push higher, then we push higher. That's a bull case. But if we pop up, sink back down, and can't manage to find our footing within this consolidation range up here, then we can very easily see it turn back down, put a little more confidence in this price area, which is very weak. Big hole right there, lots of liquidity down below. So that's, excuse me, that's how we're looking at here. We are going to go and move this from, and I want to leave it here for a second. The reason why is because we've already done it before, and you can see that we peaked up above it, and then we use it again as resistance after we drop below it. Popped up, tried to get above it again. So this was an important level for that. However, with these two new tops and the all-time high, I think we're definitely going to move that up there. So if we get above this area, we could continue to see. I do not want to do that too quickly though, because I would like to see us stay away from the third ATR. I think the more that we approach, especially quickly up into that area, the higher the probability that we see a reversal on. Now it's tradable, but I would like to see more consistent buying with a little bit of volume. Now we are in the last quarter of this year, and the beautiful part about the last quarter is it is traditionally historically good quarter, especially things like the Santa Claus rally and the holidays in general. So we'll see how that works. We will see how that works. And finally, on to the PS, the resistance in cube. Kind of same picture, right? It's a little bit wider range, but basically it looks the same as the other three. So this one did not exactly consolidate. Like I thought consolidate, we rose on Monday. And then we dropped straight down, not quite engulfing time, it was the first above the low there. We started a little bit higher again, kind of looking hopeful, but then we had a nice drop, good recovery, buyers came in. And then Thursday, again, we started lower, looked like we were going to try and recover, dropped back down, didn't quite make a reversion of the mean, but close enough. I'd say just below the 180, one standard deviation, one standard deviation off the tails. Friday was interesting. Friday was interesting, we went higher, and you know, this was looking incredibly bad. It was looking very bad. But by the end of the day, we completely turned around and closed to the upside rather strongly. Good bullish looking candle. Actually, and the fact that we're coming into this kind of consolidation area up here at the top or just below it gives us the same sort of feeling as we saw in some of the charts. That is, if we get up into here and start moving sideways, strong arguments for a more bullish move. However, if we reject this area and start to turn around, we still got a lot of price inefficiency down here in this box. Yep, same price all the other ones are. We could actually see a little bit more reversion to the mean, and it wouldn't hurt it at all. Actually come down, hit the mean, maybe hit this level. But if we hit this level, I'm thinking we actually go and close the gap. That's my guess. I'm going to leave it there. I don't have the price target, or price line here at the top. I'm just split the difference between the two. And the reason I'm doing that there is because I think if we do get back above here, start closing candles, that it's a good argument for how much is going to move to the upside. Overall, I have a bit of a bullish bias. Now I tried the NQ, and this is the one I'm probably the least convinced on. Maybe because I tried it, I don't know. It is one I'm least convinced on. Also, if you stuck with me here to the end, videos get a little shorter, you know what I am going to let you know that I'm trying the project and I'll start putting things on here. Not necessarily strictly related to trading, although there will some trading books involved. But I'm going to start kind of solo book club. Feel free to join on if you want. Where once a week I will go through, I'll pick a book. My favorite, by the way, are classic literature, specifically English literature. But there's also a great deal of trading psychology books out there. Reminiscence of the Smart Trader is one of them that I've gotten a lot of use out of, a lot of valuable psychology information out of. Plus, it's very interesting now. What's the I don't know the guy's name, but there's two rather prominent psychology books out there for trading that I will probably do one at a time and make some videos on those. My reviews of the chapters and probably reading the chapters well. So we'll see how those videos work out. If they work out, it's an experiment. I haven't totally sold myself on it yet. But we're gonna give it a try and create a separate list with those books. And the reason I want to do that is because it is so easy to get caught up in these charts behind these screens, waiting for every little alert, every little ding on our phone that says, hey, get into this, get out of that. And we need that screen time. Absolutely, 100% we need the screen time. You cannot do this if you do not put in screen time. Chart time. I was like, I need just screens, but you need to be in the charts. And you need to be watching price action as it happens to understand the character of these things. But we cannot escape the rest of life. Why are we trading? Why are we trading? Are we just trading for money? Seriously, is that all you're after? I mean, you can make it, sure. I personally feel that if that's what you're after, you're likely not to, because your focus is in the wrong place. But I have discovered more. I mean, I initially started trading as a way to bring in income. I wasn't trading for money per se because I never had love for the money itself, but rather the freedom of options and choices that it can provide, the way it can help me take care of my family. That's the kind of income I was looking to provide for myself. However, I found the more I focused on it, the less I was actually able to accomplish it because every backward step felt like it was taking something from me. Even if it was with profits, it still felt like it was taking something from me. And so I'll get into the emotional ranges of trading on tilt. Okay, this is what I love, trading on tilt. And it turns out that we need to be more than just people going after money. So what's the rest of life? Is it behind these screens and all these dishes? Really the laws of attention span? I don't think it is. I tend to go more analog I began writing letters. Well, I shouldn't say began. I've been doing it for a while, but writing handwritten letters, sending them to people. I began to keep a journal. I would say began on that because even though I've been doing that for over a year, it is definitely something at this later stage in my life that I realized I should have been doing earlier. And it's a handwritten journal. It's not a digital journal. I'm typing it down. If anything, I will turn off the screens. I will shut down my computer. I will unplug my laptop and move it completely out of my workspace so that I can focus strictly on what it is I'm thinking and writing. These things have helped me. I've taken up an interest in fountain pens as a result. I really enjoyed writing with them. Highly recommend if you get the chance to try those out. And then, more importantly, I've always read books my entire life, but I've been able to put a greater focus into the books that I read and tackle some of the ones that I know have been a challenge for me. Right now, reading The Lord of the Rings, I've never really enjoyed that book. And yes, it is one book split into three volumes, but it is, as it says in the preface, so you know from the author, it is only one book. Quite the opposite. However, I've always fallen asleep. That book puts me to sleep, so I'm forcing myself to actually read through it and try and get more out of it. And it's love the story. So there's gotta be something there. So many people love the story. I figure maybe I'm missing something. Those are the kinds of things. But otherwise, I think I've been through so many books since being out here. I'm doing this, and I just want to share some of that with y'all, and I'll hopefully discuss the chapters once a week, plus it gives me a matter of accountability for some of the harder books that I may be doing. I'm not going to include The Lord of the Rings. Again, I'm not sure which book I will start with. I'll find something that I find provoking, hopefully, and maybe join me there either, but if you do, you're more than welcome. In the meantime, I will see you next week, and farewell.